This is Nightly Business Report with Sue Herrera and Bill Griffin.
No place like home, but there aren't enough houses on the market to meet demand. So why aren't builders building? Modern medicine scientists say they are making headway on what they call the holy grail of the flu, a universal vaccine. Going global, why our market monitor says now is the time to look overseas for returns. Those stories and more tonight on Nightly Business Report for Friday, March 16th. Good evening, everyone, and welcome. I'm Sue Herrera. My partner, Bill Griffith, is off tonight. Stocks closed out the week on a high note. The major indices all rose as investors focused on upbeat economic data and looked past some of the trade concerns that kept them on edge the past few weeks. The Dow Jones Industrial Average rose 72 points to 24,946. The Nasdaq was up just a fraction, and the S&P 500 added 4 points. But for the week, the averages fell 1% or more. Dominic Chu takes a look at the week that was and the week to come.
Over the course of the past week, business news headlines ran the gamut. Chipping away at a big takeover deal, more controversy at United Airlines, and no real fun and games for a big toy retailer. So it was going to be the biggest tech merger and acquisition deal ever. Singapore-based Broadcom's proposed takeover of San Diego-based competitor Qualcomm. But it's not meant to be after President Trump stepped in and blocked the deal, citing national security concerns. United Airlines is under fire again, this time following the death of a dog on one of its flights after a flight attendant ordered a passenger to put her pet carrier in an overhead bin. It comes a year after the airline saw one of its passengers forcibly dragged off an overbooked flight. And now it's official. Toys R Us will be shutting down or selling all of its U.S. stores after it failed to find itself a buyer or reach an agreement with its creditors about restructuring billions of dollars worth of debt. As for what next week will bring, how about the Fed, Nike's bottom line, AT&T's big day in court, and a big tech IPO? The Federal Reserve convenes on Tuesday and Wednesday to decide on interest rate policy, with newly minted Fed Chair Jerome Powell giving his first news conference tied to a rate decision. Athletic apparel maker Nike will report results and will likely face a lot of questions with regard to recent reports about allegations of inappropriate workplace behavior from key executives. Telecom giant AT&T goes to court to try and win approval of its proposed takeover of media company Time Warner. The government is suing to block the deal on antitrust concerns. And data storage company Dropbox is expected to start trading this week in what will likely be the biggest tech-related IPO of the year so far. For Nightly Business Report, I'm Dominic Chu.
Dom just mentioned Nike, where two high-ranking executives are leaving. Late yesterday, the company said Nike's brand president resigned. The resignation came on the same day that the CEO told employees about complaints of inappropriate workplace behavior. Today, a second veteran is reportedly leaving in the wake of internal complaints. Nike was the worst-performing stock on the Dow today. To the economy now, where consumer sentiment hit its highest level in 14 years. The University of Michigan survey said most respondents were upbeat about the economy and their personal finances following the tax cuts. Economists say the advance in confidence could contribute to solid consumer spending. The number of job openings hit a record in January of more than 6 million. According to the Labor Department, the number of people hired rose and fewer people quit their jobs. The report suggests that employers are having a hard time finding workers that they need. The unemployment rate sits at a 17-year low. Home builders broke ground on fewer homes than expected last month, and that is not good news for a housing market facing a critical shortage of homes for sale. Diana Olick takes a look at what's keeping builders from building.
Nearly everything that goes into building a home is getting more expensive. Land, labor, and now materials, thanks to new tariffs on lumber, steel, and aluminum. The price of framing lumber is up over 40% since the start of 2017 and hit a record high last week. Builders have been up against a shortage of labor and buildable lots. Now tariffs on steel and aluminum, as well as economic policy, all making it even harder to build homes buyers can afford.
It's not just lumber, it's steel, it's impact fees, it's permitting, delays, it's, rising interest rates. There's a concern that a lot of these cumulative impact of these increases will curtail demand at some point, and that's, I think, the bigger concern.
Higher costs mean builders can't make enough money building entry-level homes, the homes that are most in need. Demand is also growing as millennials reach their home buying years. Add it up, and it just equals higher prices for buyers and more risk for builders and distributors.
We can digest through moderate price increases, but when they're spiky, we make commitments to our customers, they make commitments to their homeowners, customers, and when our costs go up and don't have a chance to, pass those through, then it damages our profit margins in our businesses.
Single-family starts are up, but just 3% higher than a year ago. To put it all in context, at the peak of the housing boom, we were building 9 homes for every 1,000 people aged 18 to 65. At the bottom in 2009, that fell to just over 2 homes per 1,000. Now we're barely back to 4. A normal level is about 7. And those numbers don't even take into account all that pent-up demand from the recession or the millions of homes bought by investors during the foreclosure crisis and turned into rentals. In other words, builders aren't even close to keeping up. For Nightly Business Report, I'm Diana Olick in Silver Spring, Maryland.
One of the country's biggest mortgage lenders is reportedly the subject of a widening Department of Justice investigation. According to the Wall Street Journal, the FBI has interviewed employees at Wells Fargo's wealth management business that extends the sales practice probe beyond the firm's retail banking unit. Well, it was 10 years ago. Bear Stearns was bailed out. The once storied Wall Street firm was forced into a shotgun marriage with J.P. Morgan and nearly $30 billion in assistance to save it from bankruptcy. In the months prior, the bank had written down bad loans, cut jobs, and looked for investors. And as someone who was covering that story, the run on the bank and its ultimate sale was a remarkable turn of events. A stunning day on the stock market. Stocks under severe pressure earlier this morning after Bear Stearns gets a bailout.
It lost its ability to finance itself. And when you're an investment bank and you're levered significantly, you need to be able to finance yourself. These things can happen like that.
The speed at which the firm collapsed, the fire sale price, well, they've shocked Wall Street.
Attempts to help Bear Stearns has damaged the stock, and in fact, it's damaged confidence overall, particularly in financials. This is part of the great frustration. You do nothing, the stock goes down. You try to help it, the stock goes down.
J.P. Morgan Chase is buying Bear Stearns at a rock-bottom price, $2 a share.
People at Bear Stearns who I've spoken with are just stunned by what's happened here.
One individual told me, 17 years I've been saving for my kids' college education. Now I've got to start all over again.
Folks, investment banking will never be the same.
And Steve was right. A lot never was the same. Many financial historians have marked that day as the starting point of the biggest financial crisis since the Great Depression. It is time to take a look at some of today's upgrades and downgrades. Netflix saw its price target raised to $350 a share over at RBC Capital Markets. That firm sees Netflix growing in Japan, which can be difficult for Western companies to do. The analyst is also upbeat on the company's original content. Nonetheless, shares fell fractionally to $318.45. Dominion was downgraded to neutral at J.P. Morgan. The analyst cites uncertainty around Dominion's funding strategy following a tax ruling by energy regulators. The price target was cut to 74. Shares of Dominion fell today to 70.61. Wayfair saw its rating cut to underperform from neutral over at D.A. Davidson. That firm cites increased competition in the online retail home furnishings market. The price target remains at 65. Nonetheless, shares of Wayfair fell nearly 6% to 78.95. Still ahead, rolling out the welcome mat.
Puerto Rico is trying to become the destination for blockchain and cryptocurrency developers. But will it succeed as the island recovers from one of the worst hurricanes on record? That story when Nightly Business Report returns.
A city in upstate New York is the first to ban new Bitcoin mining. Late last night, Plattsburgh's City Council approved an 18-month moratorium on new cryptocurrency mining operations. The mining process involves the heavy use of computer servers, and they use a lot of electricity, which in turn is raising rates for city residents. Miners have flocked to Plattsburgh because of its proximity to a hydroelectric dam and cheap energy prices. Meantime, Puerto Rico wants to attract the blockchain industry to help that island help fund its economic revival. Blockchain is the technology behind cryptocurrencies. Seema Modi is in San Juan.
Puerto Rico was already struggling through a decade-long recession, which pushed the U.S. territory into the largest municipal bankruptcy in U.S. history when one of the most destructive hurricanes in history made landfall in September. It's now been 6 months after Hurricane Maria, and Puerto Rico is desperate to bring business back to the island. And the government is positioning itself as a hub for the rapidly growing blockchain industry, which has yet to claim a city as its headquarters. This past week, thousands of crypto and blockchain developers descended upon the island to attend 3 separate industry conferences in the capital of San Juan. Puerto Rico's government even hosted a 3-day event in conjunction with blockchain industries, where the Secretary of Department of Economic Development announced a new advisory council initiative to help develop and attract blockchain business to the island.
We are welcoming, with open arms, blockchain technology for Puerto Rico, because we know that there's a huge potential for the island.
Tax incentives make Puerto Rico an appealing destination, specifically Acts 22, which says if you become a resident of Puerto Rico, you essentially pay no taxes on long-term capital gains. It's the main reason cryptocurrency investors and blockchain entrepreneurs have moved down to the island.
This is one of the best places to put a startup company. The tax incentives are incredible for a startup. The talent down here is incredible.
Thompson decided to make the move to the island in September of 2016, where his drone storage and analytics company utilizes tax incentives for his business and himself personally. But challenges do exist. While over 90% of the island's power has been restored, many citizens tell us they still deal with power outages on a weekly basis. A few entrepreneurs also told us that while the government is receptive to blockchain, the local banks haven't been as supportive, which makes lending and accessing credit a big challenge. But some experts say if Puerto Rico can improve its talent pool, the island will have a better shot at competing with the likes of Switzerland, South Korea, and Japan, which are also competing to be the headquarters for the blockchain industry. Seema Modi, Nightly Business Report, San Juan, Puerto Rico.
Tiffany loses its shine, and that's where we begin tonight's market focus. The high-end jeweler reported disappointing same-store sales, citing soft demand in overseas markets. The company is also forecasting full-year profits largely below expectations as it invests heavily in its turnaround plan. Tiffany shares fell 5% to end the session at $97.51. A private equity firm has offered Johnson & Johnson more than $2 billion to acquire its diabetes unit. J&J has been considering options for that business, which has suffered from falling sales. The company has until mid-June to make a decision. J&J shares rose fractionally to $133.68. The former chairman of Qualcomm is reportedly trying to take that company private. Multiple reports say Paul Jacobs, who currently holds a board seat, told the board of his plans and approached companies to become investors. The deal is considered a long shot, though, for Jacobs, who once ran that company. Qualcomm was recently the target of a hostile takeover by Broadcom. The shares rose 1% to $60.62. Investors had their first chance to react to Overstock's quarterly results, which the company described as, quote, terrible. The company reported a loss and a drop in sales. It also warned that the previously disclosed SEC probe tied to its upcoming crypto coin offering could hurt its performance. The shares were off 5% to $45.70. Our market monitor tonight is looking to the global economy for his returns, and he's recommending 3 ETFs. This is his first time on the program, so we welcome Scott Hubie. He is the Chief Investment Officer at the Carson Group. Welcome, Scott. Nice to have you here.
Thanks, Sue. Glad to be here.
So you see the global growth picture as perhaps more compelling or equally as compelling as the U.S.?
Yeah, I think we've seen a real upswing globally, not just in the U.S., but Europe, which had great growth last year. We also saw Brazil come out of recession, strong emerging market growth out of China, solid growth in India. And Japan put out pretty good numbers for Japan as well. So it's been a real surge, and we think that's going to adjust the opportunity set in the investment landscape quite a bit.
All right, so let's start with your first pick. They're all three ETFs. The PowerShares International Buyback Achievers. Why do you like that?
You know, this is probably the most interesting one of the three in that it focuses on the international markets directly. International markets are cheaper than the U.S., so we like that right off the bat. But we also realize that international stocks aren't quite as shareholder friendly as they are in the U.S., and so we want to focus on those that are. And one of the ways that they can be more friendly is buying back their shares. And so we zero in on those types of companies. Because interest rates are still a lot lower overseas than they are in the U.S., the cost to buy back shares is actually quite a bit lower. And we saw the same strategy work very well in the U.S. a number of years ago. We think it translates well overseas right now.
All right. The next one is the iShares Edge MSCI Value Factors ETF. Tell me about that.
Yeah, as the economic recovery starts to broaden, we just see that the number of companies that will benefit from it will widen. This market has really been characterized by a narrow set of growth companies doing extremely well. But as growth kicks in, we see more companies are going to do well. And so we want to own value stocks. We think those are going to have a solid rebound after years of growth outperformance. One of the big changes, though, we want to see within value is do you really want to have a big sector emphasis that often comes with value? So this ETF is sector neutral, and it's going to have the same amount in technology as the overall index, the same amount in staples. And we like that mixture of emphasizing the cheapest stocks, but being balanced across every sector that's out there.
All right, let's wrap it up with the Fidelity MSCI Financials ETF. Why do you like that?
Yeah, I think financials have really suffered through the recovery. They haven't done as well coming out of that financial crisis, which you referenced earlier, over the last 10 years. And so we see some big opportunities in this space, but we see some specific benefits from overall global economic growth kicking in. One of them is loan growth has been really, really slow during this recovery. And so we see an opportunity for that to kick up, and also see the fact that long-term interest rates should rise. And so we should see banks being able to earn more on the loans that we're making. We really see that financials and those loans will be likely to pay off as long as growth continues to stay strong. So this seems to be a sweet spot for financials to take advantage of the global economic growth and really benefit shareholders.
Okay. Scott, thank you very much. Scott Cubey with the Carson Group. You can read more about his stock picks on our website at mbr.com. Well, thank goodness the peak flu season is behind us, but it's not quite over yet, and this one has been especially severe. But there may be some positive developments when it comes to creating a universal flu vaccine. Meg Terrell has our latest story on modern medicine.
And say ah for me. There you go. Yep.
Every year, the flu takes a major toll, causing millions to get sick, hospitalizing hundreds of thousands of people, and leading to tens of thousands of deaths in the U.S. alone. This despite the availability of a flu vaccine.
Of all the vaccines that we've developed over the years, influenza vaccine can use a lot of improvement.
Vaccines for other diseases like yellow fever, measles, and polio are all more than 95% effective at preventing infection. The flu vaccine, about 40% on average since 2005. But its effectiveness varies widely season to season, with initial estimates of this year's flu shot at about 36%. That's because the part of the flu virus targeted by the seasonal vaccine changes each year. So efforts are underway to develop a so-called universal flu vaccine, one that would work no matter what strain of flu is circulating and be durable for multiple seasons. Dr. Peter Palace's group at Mount Sinai's Icahn School of Medicine is among those working on such a vaccine, what those in the field refer to as influenza's holy grail.
A universal influenza virus vaccine is one which would last a lifetime, hopefully, but at least we hope it works for 20 years or even longer.
Only recently have discoveries about the flu virus and new technologies enabled the work on a universal flu vaccine to accelerate.
We only realized about 10 or more years ago that there was a part of the virus that doesn't change from season to season. Once we recognize that, the real problem and the stumbling block is how do you get the body to preferentially make a response against that molecule.
Palace's team, funded in part by the National Institutes of Health, has one approach.
We are building a virus in the laboratory, a new one, which isn't out there, and then we make from that a vaccine.
The new virus is designed to stimulate an immune response that will protect from the flu from season to season. The experimental vaccine is now being tested in the earliest phases of human clinical trials, funded by GlaxoSmithKline and the Gates Foundation. Work on a universal flu vaccine is also underway at Johnson & Johnson and Sanofi Pasteur, as well as at smaller private companies. Initial results from Dr. Palace's trials are expected within a year. Then more testing will be needed before it can reach the market.
We are talking about years, but we are not talking about decades.
Until then, public health officials still recommend the seasonal flu shot. For Nightly Business Report, I'm Meg Terrell.
Coming up, the great space race.
I'm Morgan Brennan inside a future spaceship. Meet Starliner. This is Boeing's capsule that could, by year's end, be carrying American astronauts into space. We've got this story from here at the Kennedy Space Center coming up on Nightly Business Report.
The race is on to get humans into space from U.S. soil, something that hasn't happened since the space shuttle program ended. Both Boeing and SpaceX are leading the charge, and Morgan Brennan got a closer look at Boeing's operations at the Kennedy Space Center in Florida.
Meet Starliner, a Boeing spacecraft that's been years in the making. If all goes according to plan, before the year's out, it will carry astronauts to space. It would mark a major milestone. The U.S. lost the ability to launch astronauts from U.S. soil when the space shuttle program ended 7 years ago.
Liftoff of the Soyuz rocket.
Instead, we've been relying on the Russians to do it for us. President Trump has talked about going to the moon and Mars.
It marks an important step in returning American astronauts to the moon.
But the new space race really starts here with NASA's Commercial Crew program.
Every other NASA human spaceflight program has been cost plus, and the responsibility of the contractor was to deliver the transportation platform to NASA for their use. On Commercial Crew, it's more of a rental car model where we retain the asset and they take it just for their use in that particular mission.
John Mulholland would know, since Starliner's program manager used to work on the shuttle.
Starliner is one of two spacecraft. The other is SpaceX's Dragon capsule being produced for manned missions to the International Space Station.
Boeing is building 3, all of which will soon be leaving the factory ahead of major tests. The crew module will be able to fit 7 people and reflown up to 10 times. The first manned flight is scheduled for November from Kennedy Space Center.
Astronauts are already doing evacuation drills.
Yes.
On the lines above us?
Yeah, it's really exciting. We have the emergency escape system installed. We've actually checked it out with the astronauts in full spacesuits, ready to support any operation that's occurring up on the tower.
United Launch Alliance, the rocket company jointly owned by Boeing and Lockheed Martin, will handle the launches.
Here, 17 stories up on the launch pad, this is the White Room, quite literally the last stop on Earth for astronauts before they enter Boeing's Starliner and head to space.
Boeing's contract with NASA is a little more than $4 billion, but it's what comes after that could generate the biggest business.
Commercial aviation was a government-sponsored foundation to meet their strategic need. It slowly evolved into a commercial market, but only for high-wealth individuals. And now we're at the point in the market where we have a 737 take off and land about every 2 seconds. And we can see the growth in the commercial spaceflight market paralleling that.
For Nightly Business Report, I'm Morgan Brennan at the Kennedy Space Center in Florida.
And to read more about the race to launch the next generation of human spaceflight, head to our website, nbr.com. Before we go, here's a look at how the day on Wall Street ended up. The Dow rose 72 points. The Nasdaq was up a fraction. The S&P 500 added 4 points. But for the week, the averages fell 1% or more. That will do it for Nightly Business Report tonight. I'm Sue Herrera. We want to remind you this is the time of year your public television station seeks your support. Thank you. Have a great weekend. See you Monday.